All right, I think we'll have a few more people join us as we get going here, but welcome everyone. Thanks for joining us today. This is another local administrative advisor webinar, part of our series that we have going here. For anyone that is unfamiliar with what the local administrative advisor program is, it was funded through the state legislature, not this last session, but the session before. That's helping to provide administrative services to cities and towns with a population under 10,000 with an emphasis under 5,000 who do not have city managers or city administrators and that professional staff. So they're hiring people at the associations of governments. They're all pretty much in place now, and they're on the ground and ready and willing to help you out. So if you have any projects like that you might need some assistance with, please let me know. You can also go to ulct.org/LAA, and you can find more information on the program there, as well as who your contact might be and previous webinars that we have already completed and the ones that will be up there soon. So this webinar will also be there along with the slides once we get finished up here. My name is Liam Throkill. I'm a policy analyst and program manager at the Utah League of Cities and Towns. And with me today and who's presenting is Adam Lenhard, who has a lot of awesome experience in local government. And we'll be talking about some sales tax and sales tax basics today. So with that, I'll let Adam get going.
All right, thanks, Liam. Hi, everyone. Thank you for joining us today. As Liam said, I'm Adam Lenhard. I've served in local government in Utah for over 20 years. My background is in land use planning and city management, and I love the work I get to do for the league. I'm excited for today's presentation. Today, we're going to talk about the sales and use tax. Sales tax is one of the largest, if not the largest, sources of revenue for the state of Utah and its local governments, including your cities and towns. So it's important to understand how it works. We're going to look at this from a historical perspective. We'll get a good overview of what sales tax is, how it has evolved over time, how it functions today. Then we're going to discuss specific types of sales taxes, and we're going to look at how sales tax flows from the consumer to your city or town's bank account. And then the last topic today will be the local option 1% sales tax, because this is a really important sales tax to cities and towns. We're going to set aside some time at the end for questions, but feel free to comment as we go and we'll do our best to address those. So, sales tax is complicated. There's no way around it. It gets very technical very quickly. There's a lot of nuance and detail. Because of that, we're going to keep our conversation at a high level today, and I'm going to focus on the things that I think are most important and most relevant to you in your local government service. In addition, a little bit of math is required when we talk about sales tax. It's unavoidable. I know not everyone enjoys math. So whenever I show calculations, I'm going to do my best to keep those really simple as well. That said, please don't be discouraged. We'll get through this. We've got a lot of things that we're going to go through, and I think you'll learn some cool stuff about sales tax. So the laws that govern the collection and administration of sales tax in Utah are found in Utah Code Title 59, Revenue and Taxation, and more specifically, Chapter 12, the Sales and Use Tax Act. Here's something that's kind of interesting. Chapter 12, all by itself, is 273 pages long, single spaced. Like I said, there's a lot of detail when it comes to sales tax. But the good news is that there are a lot of resources available to you to learn about and understand sales tax. In addition to what we're going to learn today, the state of Utah has a great website. It's tax.utah.gov/sales. Everything you could possibly want to know about sales tax is there. In addition to the information on the website, the State Tax Commission puts out 18 different publications. They cover all of the rules, regulations, and procedures for sales tax. So there's a lot of information out there available to you. Speaking of the State Tax Commission, this is the official state agency that's responsible for the administration and oversight of all taxes within Utah. It was created a long time ago, way back in 1931. It has 4 members. And these members are appointed by the governor and then confirmed by the state senate. It's meant to be a non-political body, so no more than 2 of the 4 members can be of the same political party. There's a full-time executive director who oversees the agency's plus or minus 250 employees. as well as the day-to-day administration of the agency. And we'll talk more about the tax commission later on. When it comes to taxes, most taxes fall into one of three different categories. The first category is taxes on things we own. So these are property taxes, estate taxes, inheritance tax. The next category is taxes on what we earn. So these would be your income, payroll, and capital gains taxes, for example. And then the last category is taxes on things that we buy. And these are known as consumption taxes, because they are levied on items that we consume. Sales and use tax are types of consumption taxes, and there are a few others that we're not going to spend any time on, value-added tax, import duties, excise taxes, etc. So let's look at some definitions. Sales tax is a tax that is levied on the purchase of certain goods or services, often as a fixed percentage of the purchase price. I emphasize the word certain here because, for better or worse, there are many goods and services that are exempted from sales tax. And I'm going to talk about exemptions and exclusions in just a minute. Sales tax is also imposed by governmental entities at different rates and levels. For example, when I say state sales tax or state level sales tax, what I mean is that the state government itself has adopted a sales tax to fund a portion of its operations, and any revenue that comes from that sales tax goes into the state's budget. Likewise, if I say a local sales tax, what I mean is a sales tax that is adopted or enacted by a local government, like a county, city, town, or district, and the revenue from that sales tax goes back into that local government entity's budget, bank account, okay? Now's a good time to mention, I am going to use all of these words interchangeably throughout the presentation. Yes, I think there's some technical differences if you really, got into it, but we're just going to ignore those for today. They all mean the same thing, which is generally that a governmental entity passed a law to collect sales tax within its jurisdiction. So we're not going to get hung up on any differences between levied or enacted or adopted or whatever. They just mean the same thing. Let's talk about the use tax for a minute, since today's topic is sales and use tax. Use tax is essentially a sales tax. It just functions a little differently. A use tax is a sales tax that gets charged on goods or services purchased out of state from a seller who's out of state, not in the state of Utah. And then those goods or those goods, I should say, are used, stored, or consumed within the state. The use tax is assessed at the same rate as the sales tax rate. So if the sales tax rate is 6%, the use tax rate is going to be 6% as well. And the use tax is not new. We've had use tax in Utah for a long time, but these days it's just not something we deal with on a regular basis. In the early days of the internet and online shopping, use tax was a bigger deal, but not so much anymore. Regardless, let's say you purchase something from a seller that is not located in Utah, and at the time of the transaction, you don't pay any sales tax. By law, this is when the use tax comes into play, where you, as the taxpayer, are supposed to declare that purchase on your income tax return with the state of Utah and voluntarily pay the corresponding amount of sales tax that is owed. But here's the problem. There is no practical way of tracking or enforcing payment of the use tax. So in reality, very few people actually pay use tax like they're supposed to, and most people don't even pay it at all. They don't even know they're supposed to pay it. And for that reason, use tax is inefficient and ineffective. Not bad, just not very efficient. Since the use tax is pretty much just sales tax by another name, and because we just don't run into it that often, for the rest of the presentation, I'm not going to distinguish between sales tax and use tax. I'm just going to call all of it sales tax. But now you know. So you know about use tax. We've got some basic definitions out of the way. Here's a question. When do we pay sales tax? What is taxable? What is the tax base? So the state of Utah gives us this definition for taxable goods and services. It says sales tax applies to retail sales and leases of tangible personal property, products transferred electronically, and certain services purchased for storage use or consumption in Utah. It already feels unnecessarily wordy and complicated, right? Regardless, this definition is the sales tax base in Utah. Tangible personal property is a key phrase here. What does tangible personal property mean? It is property that can be seen, weighed, measured, felt, touched, or in any manner perceptible to the senses. There are some utilities in that definition. Pre-written software is included in the definition of tangible personal property, and therefore it is taxable. I'll give you an example. Microsoft Office 365, Adobe Acrobat, those are, able to be purchased off the shelf. You're going to pay sales tax on that because they are pre-written software. However, if you go out and hire a software programmer to write a custom piece of software for you, you would not pay sales tax on that transaction because it is not pre-written. And then finally, a very important point, tangible personal property does not mean real property. Real property is land, buildings, water rights, mining rights, rents, etc. So if you buy a home, if you buy a lot, you do not pay sales tax on those transactions. Regardless, this is the sales tax base in Utah. So when do we not pay sales tax? Well, we don't pay sales tax in Utah on items that are either exempted or excluded, and these have different meanings. A sales tax exemption is an item that falls within that definition of the sales tax base that we just looked at. So by definition, it should be part of the sales tax base, but because of specific legislation, it has been removed or exempted from the collection of sales tax. I've listed some examples here. For each of these items that you can see as exemptions, there is a corresponding law, a written statute that calls this item out and specifically says it is not subject to sales tax. An exclusion, on the other hand, would be any item that does not fall within that definition of the sales tax base from the previous slide. Some examples here, healthcare services. I think we all agree we would hate to pay sales tax when we go to the doctor. So fortunately, we don't have to. There are some other things listed here. I'll let you look at those. Certainly, when you see these items that are either exempted or excluded, it may feel like there's not much rhyme or reason. And I'll just tell you, sometimes there is. Sometimes there's a very good reason why an item has been exempted or excluded. And sometimes you might just be left scratching your head going, I have no idea why that item has been exempted, but it has for whatever reason. And it is the way it is. We could easily spend a whole hour, our whole time today, talking about sales tax exemptions and exclusions. Most of you, I would guess, would drop off the call immediately. It is complex and mind-numbing, and I wouldn't blame anybody who didn't want to sit through that. Instead, if you're interested, and I know this is going to sound like a joke when I say this, but if you're interested in exclusions and exemptions, we have a link to a really well done presentation that the State Tax Commission puts out. It's all about exemptions and exclusions. It is 50 slides with words that are a lot smaller than what you see on this slide here. There's a lot of information, but absolutely we can make that available to you. It is interesting, and if you want to know more, just let us know. We'll make that available to you. Okay. I want to switch gears a little bit. I want to quickly address the concept of nexus because it is essential to understanding sales and use tax. Nexus is a word that means connection, link, or tie. So keep that in mind. The Commerce Clause of the United States Constitution, it's Article 1, Section 8, Clause 3, grants power to the federal government to regulate commerce among the states or from one state to another. And it restricts states from interfering with interstate commerce. Interstate commerce, again, the transportation, exchange of products, services, or money across state borders. So the Commerce Clause of the Constitution specifically reserves the power to regulate interstate commerce to the federal government. For many years, the United States Supreme Court held that the Commerce Clause prohibited states from collecting sales tax from out-of-state sellers. And this was based on several high-profile cases that I've listed here. In other words, states could only collect sales tax from sellers that had a physical presence in their state. that physical presence was known as the nexus or the connection. And if a seller had a physical presence in the state, then the state could collect sales tax from it. But if it was not located in the state, if there was no physical nexus, the state couldn't tax that seller. Well, this was all fine and dandy until the rise of e-commerce or online sales in the early 2000s. You had companies like Amazon that began to capture a significant amount of consumption, a significant amount of consumer spending. But Amazon sales could not be taxed in most states because Amazon had little to no physical presence in most states. And by the way, when I say physical presence, I mean like an actual store, shop, maybe even warehouses. I want to make a little caveat there that I'm not 100% sure if warehouses met the definition of physical nexus. Hopefully somebody smarter than myself can tell us. I think it did, but I just want to make that clear. That's the only thing today that I'm not like 100% certain of. But anyways, Amazon just did not have a physical presence in most states. This was problematic for a couple of reasons. First of all, like I mentioned earlier, sales tax is one of the largest sources of revenue for state and local governments. And all of that consumer spending prior to the advent and growth of online shopping, all of that consumer spending was happening in our local communities. And so governmental entities were collecting that spending and they were able to generate sales tax revenue off of that. When those sales moved online, all of that spending began to escape governmental entities. And so what happened is state and local government budgets started to take a pretty big hit because of online sales. The other problem is more one that just is related to the health of our local economies. And that is the fact that, you know, that bricks and mortar store, that mom and pop store on your main street found itself in a position where it was at a competitive disadvantage to the online sellers. You know, if you're buying $1,000 TV, that could be $60, $70, $80 that you could save by buying it online because you didn't have to pay sales tax. And then, you know, that seller throws in free 2-day shipping on top of that. And we saw a lot of shopping diverted away from local business and it went online. Now, I don't mean to pick on Amazon. There were, you know, as we all know, you know, thousands and thousands of online stores. They certainly were one of the largest retailers and still are, obviously. But obviously some problems that were coming from this. So here's what happened. The state of South Dakota passed a law to try to address these problems. The law required out-of-state sellers to collect and remit sales tax. And their argument was based not on physical nexus, but on economic nexus. So South Dakota argued that an economic presence in the state constituted a nexus and didn't violate the Commerce Clause. So Wayfair, an online retailer of furniture and home goods, sued the state of South Dakota. The case worked its way to the Supreme Court in 2018, where the South Dakota law was upheld in a close 5-4 decision. As a consequence, the physical presence rule of the Commerce Clause was overturned. And so now nexus can be defined by physical or economic nexus. The interpretation of the Commerce Clause was expanded. This was a huge deal. And so this was bad news if you were a consumer just looking to get the absolute lowest price on an item. I remember when Amazon started charging sales tax, I was really disappointed. But also as an employee of a local government at the time, I understood, you know, how important that was to our budget and our ability to provide services to our residents. Today, most of our online purchases in Utah are taxed, no matter where that seller is located. We typically pay sales tax on it. The exception would be like maybe a really small seller. This very last point here on this slide, these are the thresholds for an out-of-state seller to have to collect sales tax on transactions in Utah. So either a minimum of 200 separate transactions in Utah during a calendar year or a minimum of $100,000 gross sales in the state. If an out-of-state seller meets either of those thresholds, they have to collect sales tax in Utah. So now you know. Sales tax has been around for a very long time. This is a picture of an Egyptian tomb painting depicting sales tax being paid on the purchases of wheat and other commodities. It dates all the way back to 2000 BC. We know that sales tax was collected in ancient Athens. Julius Caesar very famously enacted a 1% tax across the entire Roman Empire. And then the concept of sales tax spread throughout Europe and the rest of the world. In the United States, we've had state and local sales taxes for nearly 100 years, but we have never had a nationwide or federal sales tax. We came close during World War II. In 1942, a federal sales tax was proposed in Congress to raise revenue for the war. By this time, 30 individual US states had already enacted a state-level sales tax. So it wasn't like sales tax was this unknown concept. People were familiar with sales tax, but President Franklin D. Roosevelt defeated the proposed national sales tax on the grounds that it would do the most harm to people who had the least ability to pay it. In other words, President Roosevelt argued that sales tax was regressive. Well, what is a regressive tax? A regressive tax is one that takes a larger percentage of income from low-income earners than from high-income earners. And here's an example that I found from the website accuratetax.com. You have two workers, Mary Scott on the left, Julie Neal on the right. Mary makes $300 a week and Julie makes $1,500 a week. On average, they eat the same amount of food, so they both have a grocery bill of $100. They live in the same city. It has a sales tax rate of 6%, so they each pay $6 in sales tax on their grocery bill. But because of the difference in how much money each woman makes, Mary ends up paying 2% of her earnings in sales tax, but Julie only pays 0.4% of her earnings in sales tax. For this reason, sales tax is considered a regressive tax. Now, you may wonder, if sales tax is regressive, why don't we get rid of it? The answer is that sales tax is regressive, but it is also more politically acceptable than other taxes. If you got rid of sales tax, you'd be pretty much left with property tax and income tax to fund government operations. Sure, there's some other fees and things in there, but you're pretty much left with property tax and income tax. And those two taxes fall primarily on your own residence. Sales tax allows you to do something really well that those other two taxes cannot do, and that is it allows you to capture non-resident spending. And that is really important to a state like Utah, where we have so much tourism. So many people come to Utah and they spend their money here and then they go home, and we love to be able to capture a portion of their spending in sales tax revenue to help fund our governments. So yes, sales tax is regressive, but we're willing to accept that to an extent because it also has advantages over other taxes. Now, I want to point out that in recent years, Utah and other states have reduced their rates on grocery food precisely because of this example that we've got on the screen, to make sales tax less regressive. By the way, the opposite of a regressive tax is a progressive tax, like income tax in the United States. As your income increases, you have to pay a higher percentage of tax in each successive income bracket. So income tax being progressive, sales tax regressive. And the terms regressive and progressive, they're not meant to reflect whether something is good or bad. It's just a reflection of how they impact taxpayers themselves. Okay, a few more points about sales tax in the United States. The first official state sales tax was enacted way back in 1921 by the state of West Virginia. And then in 1933, 11 other states, including our very own Utah, enacted a sales tax of their own to address the effects of the Great Depression. So we can certainly pinpoint the Great Depression as the rise and origination or mass adoption of sales tax in the United States. By 1940, 30 US states had enacted a state-level sales tax. And today there are only 5 states in the US that don't have sales tax: Alaska, Delaware, Montana, New Hampshire, and Oregon. Now, I put an asterisk by Alaska because it is unique. Of these 5, Alaska does not have a state sales tax, but some of its cities and towns have enacted local sales taxes. The other 4 have no sales tax of any type, state or local. Okay, let's look at sales tax in Utah. I apologize in advance. I'm going to show you 3 slides with a lot of numbers and dates. You don't need to know or memorize any of this. I'm doing this though because I think it's interesting to see how sales tax has evolved over the years. And I think it gives us context to understand why sales tax is the way it is today. In the early days of Utah's statehood, Utah relied almost exclusively on property tax to fund state and local governments, almost all property tax. There really wasn't anything else. In 1930, over 90% of Utah's revenue came from property taxes. Now, being that reliant on a single source of revenue is never a good idea. And as the Great Depression worsened, there were significant property tax delinquencies across the US, but certainly in Utah as well. And the state of Utah found itself in big trouble financially. So in response to this decline in revenue, the legislature enacted Utah's first income tax in 1931. And then in 1933, the legislature enacted the state's first sales tax. That first statewide sales tax was set at a rate of 0.75%, so less than 1%. And it was meant to be temporary, just to make up for those lost revenues during the Depression. However, the financial situation was worse than expected, and very quickly the state sales tax was made permanent. I put that it was earmarked for the Great Depression. So an earmark is, a specific set aside specifically for offsetting the effects of the Great Depression. So a few months later, after it was initially enacted, the sales tax became permanent, and that rate was set at 2%. And it stayed at 2% for about 35 years, so a really long time. 2 notable things happened in 1937. First, the legislature required that sales tax was to be paid with sales tax tokens. I found a picture of these. This was totally new to me. I thought I was pretty well versed in all things sales tax in Utah, but I learned this as I was preparing this presentation. The language or the words on the tokens says Utah Sales Tax Token and Emergency Relief Fund in denominations of 1 and 5, what I assume to be cents given the year, or perhaps the equivalent of cents. But these tokens were obsolete by the early 1950s. They aren't worth much today. They're out there. They don't have a whole lot of value as a collectible, but if you have one, it's kind of an interesting part of Utah's history. Also in 1937, the use tax was enacted in Utah. And then in 1955, the earmark on sales tax, sales tax was enacted to mitigate the effects of the Great Depression. That earmark was removed. So in 1955, sales tax revenue began to be deposited into the state's general fund. It was no longer earmarked. That said, the removal of that earmark did not end the practice of earmarking sales taxes in Utah, especially over the past 25 years. We've seen a lot of sales taxes, state and local, that are earmarked for specific uses and purposes. And we'll discuss some of those in a few minutes. One very memorable earmark was for the Salt Lake Winter Olympics. So let's see, a couple more dates for you. This is the last slide that I'm going to hit you with a ton of numbers. In 1959, for the first time, the state legislature authorized local governments, cities and towns, to assess their own sales tax, which was separate from and in addition to the state sales tax. And that local rate, we call it the local option, was set at 0.5% initially. In 1969, after many, many years, the state increased its sales tax rate from 2% to 4%. And as I looked into the reasons behind this increase, it's a 100% increase. The reasons that I found were just really due to the growth of the state and the demand for public services. We had transportation infrastructure needs, education needs, our population was growing. So that was a pretty significant event in 1969. Then in 1987, the state rate maxed out, reached its all-time high at 5.09%. That's the highest it's ever been. In 1990, the local option that I have here at the top of the slide that was first enacted in 1959, that local option rate was raised to 1% in 1990. We'll talk more about that later. And then in 2007, the state began to adjust its rate on grocery food downward in order to make it less regressive. Today, the state rate on grocery food is 1.75%. I'm going to show you some more slides that put this stuff in context. I know it's overwhelming right now, a lot of numbers. And then in 2019, the state adjusted its rate to 4.85%, and that's where it remains today. Perhaps the takeaway from all of these numbers and dates is this: tax rates are fluid, tax policy is fluid, taxes can and will change. In fact, I think there's a great argument that rates should be adjusted as often as necessary to reflect a changing economy. Okay, we've learned a lot so far. Let's walk through an example. Let's say you're up in Smithfield, the beautiful town of Smithfield, and you buy a toy bear from Bob's Toy Store. I chose Smithfield because the total or combined sales tax rate there is an even 7%, and that makes our math a little bit easier. So the purchase price of the toy bear is $10, and that means the sales tax is 70 cents because 7% of $10 is 70 cents. You add the purchase price and the sales tax together, and the price you pay out the door is $10.70. Now, your receipt is going to look a lot like this. It's going to say product price, $10, sales tax, 70 cents. If you were also buying groceries, you would see another line where the groceries are broken out separately with their tax rate listed. But since we're shopping at a toy store for a toy bear and there's no groceries involved, it's just one line for the sales tax, and it says 70 cents. But here's the thing: even though you just see the one line for sales tax for 70 cents, that 70 cents is actually made up of 7 different sales taxes at varying rates. Now, that may surprise you to know that there are 7 different sales taxes that get charged in Smithfield. And naturally, you may start to wonder, how many different sales taxes are there in Utah? And the answer is that there are 18 different sales taxes in our state. They are location specific. So some of these sales taxes are charged in every jurisdiction, and others exist only in a handful of locations. One of these 18 sales taxes is only charged in one town in the entire state and nowhere else. The rates vary on these 18 different sales taxes, and most of them are earmarked for specific purposes and uses. For example, 9 of the 18 are to be used only for funding transportation needs. So I'm going to show you all 18 sales taxes, starting with what we call the 3 common rates. They're called common rates because they are charged everywhere in Utah. We're going to start with the largest of the 18 rates, the state rate. It's the largest percentage, and it comes in at 4.85%. And again, when I say state rate, what I mean is this sales tax is levied by the state of Utah. It applies to all taxable transactions anywhere in the state, and the revenue from this sales tax goes to the state of Utah's budget. The one notable exception that I mentioned earlier is that the state rate on grocery food has been reduced. Instead of 4.85%, it's only 1.75%. Next up is the county option sales tax. All 29 of Utah's counties charge this county option tax. So that's why we categorize it as a common rate. If you buy something in Davis County, that 0.25% sales tax eventually makes its way back to Davis County's bank account. If you buy something in Daggett County, that 0.25% eventually makes its way into Daggett County's bank account. Notice that the rate for both county option and local option does not change for grocery food. Only the state rate has been reduced for groceries. When I say grocery food, by the way, I'm talking about food that you buy at the store and prepare and eat at home. So that's the definition of grocery food. Next up is the local option 1% for cities and towns. As I mentioned earlier, this sales tax was first authorized back in 1959, and today every single city and town has adopted the local option 1%, which is why we consider it a common rate. Of all the sales taxes we're going to mention today, this is probably the most important one to cities and towns, and we will come back to it. Now, these rates, these three rates, or all of the rates in any jurisdiction, get stacked on top of each other, added on top of each other. You don't pay sales tax on sales tax, but these rates get added. I've done the math here, and the total rate is 6.1%. And we call this total the combined rate. So no matter where you are in Utah, anything you buy that's considered taxable, the lowest sales tax rate you would pay, the lowest combined rate, is 6.1%, or 3% for grocery food. Okay, so next up are the transportation sales taxes. There are 9 of these. So 9 of our 18 sales taxes in Utah are specifically in place for funding transportation. And they do fund a significant amount of our transportation infrastructure needs throughout the state. These rates get complicated very quickly. I debated whether to go into detail on each one, and you can breathe a sigh of relief. I'm not going to do it. To be honest, I don't think we could do it justice in the time we have today. On average, these rates are right around 0.25%. And so sometimes we'll refer to those as like the first quarter, the second quarter, the third quarter. There's a lot here that I'm glossing over. But if you ever hear about quarters and sales taxes, it's likely referring to one of these transportation rates. Some are up to 0.30. I put asterisks on the mass transit fixed guideway and the highways tax. Those are unique to Utah County and its cities and towns. You won't see them anywhere else. And then finally, we have 6 more rates. These are the miscellaneous rates. So you've got rural hospital, and that's set at a rate of 0.5 to 1%. Revenues from the rural hospital sales tax are earmarked to fund healthcare infrastructure in rural counties. Next, you have the arts and zoo tax. Technically, the state calls this the Botanical, Cultural, Arts, and Zoo tax by the state. It goes by various names in your communities. I've heard it called ZAP, Zoos, Arts, and Parks, RAP, Recreation, Arts, and Parks. Sometimes there's an M in there for museums, Parrot, Parks, Arts, Recreation, and Trails, etc. No matter what it's called in your communities, in the jurisdictions where this tax has been enacted, it's at a rate of 0.1%. Next up, we've got the Snowville tax. I don't really know if anybody calls it that. The real name is the town option tax, but it only exists in Snowville, and the rate is set at 1%. Then we have the city or town option tax at 0.2%. This only exists in 6 communities through the whole state. And next up is resort community tax. So you've got to meet certain criteria in order to be able to enact the resort community sales tax. The criteria has to do with the number of hotel rooms that are in your city or town relative to your official population. As expected, this tax shows up in those resort towns that we think of: Moab, Park City, Kanab, Brighton, and some others. It's primarily a tax aimed at tourists and non-local visitors. And then finally, the correctional facilities tax, set at a rate of 0.5%. It's only charged by 3 taxing entities in the state, and these revenues are earmarked to offset the costs of the state prison. So those are the 18 different sales taxes that get levied in the state of Utah. So back to Bob's Toy Store. We talked about Smithfield, and I told you that Smithfield has 7 different sales taxes that are charged when you buy something in Smithfield. These are the 7 different rates. Notice our 3 common rates. We've got the state rate, the county option, the local option, and then 4 other taxes that have been enacted in Smithfield. The combined rate is 7%. Now, let's assume that Bob's Toy Store is doing really well, so Bob decides he wants to build another location, and he chooses the town of Bryan Head. Let's compare. Bryan Head also just happens to have 7 different sales tax. That's a coincidence. Some jurisdictions might have 5, some might have 9. Just so happens that they both have 7 different sales taxes. You see the three common rates there, just like they were in Smithfield, but there's some differences in the other four. And so when you add up the rates of these individual sales taxes, the combined rate is 8.35%. So what effect does that have? Well, if you buy that toy bear from Bob's Toy Store in Smithfield, which has a 7% combined rate, you're going to pay $10.70 out the door. If you buy it in Bryan Head, you're going to pay $10.84 out the door. It's a 14-cent difference. This is a small example. It's not worth your gas money or time to save 14 cents on this toy bear, but it does start to matter quite a bit when you're shopping for a car or another large ticket item. Now, I want to take a moment. I want to be very clear about the fact that Bryan Head having an 8.35% combined rate is not bad. And it's not even bad relative to Smithfield. Every city and town has got to look at their needs, the needs of their community and their funding sources. And you need to set rates that are appropriate for your community and help you accomplish what you need to accomplish. So in no way do I mean to say that one of these is better than another. One city's rate might be set artificially low and it might be hurting itself in ways it doesn't even understand. But I just wanted to be clear of that. Naturally, though, I get it. We love the comparison. We always like to know, well, how do we compare? So let's do that. Let's look at average combined rates in the United States. I grabbed this map off of the Utah Taxpayers Association website, and this shows us average combined rates in different states. So in Utah, across all of the jurisdictions in Utah, the average combined rate is 7.19%. If you look at the map, go down to the very bottom right, you see the state of Arkansas there. It has an average 9.46% combined rate. There's a number 3 there. That means it's the third highest average combined rate in the US. Oklahoma, almost 9%. Washington and California, also pretty high. We look at our neighbors in Utah and we say, hey, look, we're lower than Nevada, Arizona, Colorado, but Idaho is lower. Wyoming is lower than we are. Oregon and Montana, they're shown in gray because remember, they don't charge any sales tax at all. Again, it's always interesting to see the comparison, but I want to emphasize that sales tax rates alone are not an apples to apples comparison. They don't come close to telling the true story of what the burden is on a state's residents. What is the tax burden? If I wanted to really compare and make an apples to apples comparison for tax burden, the very first thing I would do is I would add data for income tax and property tax, because without at least those two, you're missing a huge part of the puzzle. So yes, it's interesting to look at. Don't draw too many conclusions here, just one piece of the puzzle. By now, of course, you're probably saying, well, what is the combined rate in my jurisdiction? What sales taxes do we charge in our city or town? The tax commission makes it really easy to find the combined rates for your city or town or for any jurisdiction in Utah. The place that you can find these is tax.utah.gov/sales/rates. If you were to go to that URL, the screenshot that you can see here, that's what you're going to see. This website is very well done. It's very well organized. Yes, there's some complicated information here, but anything you could ever want to know about sales tax is on this website. If you scroll down a little bit, you're going to get to this chart section. And these are all of the available rate charts, and you can download these in Excel or PDF formats. What's really cool about this is you don't even need an account or a login to be able to do this. The charts get updated every quarter, so you've always got the latest and greatest information. We're going to take a look at this chart. It's April 1st, 2024, and it's the combined sales tax rates. And so when we open this up, unfortunately, the letters on this document are really small. They wouldn't lend themselves well at all to this presentation. So I've zoomed in a little bit. I'm going to move around the document. But at the top, you can see combined sales and use tax rates in effect April 1st, 2024. Then as you go over here to the right, you can see all 18 of Utah's sales taxes. There's a legend there. It shows the abbreviation for each one of those sales taxes. There's a couple of other items that are detailed and explained in that section. And then On the far left, we see all 29 of Utah's counties in alphabetical order, starting with Beaver County. So Beaver County, then Box Elder County, all the way down to Weber County at the end. Each jurisdiction has a code. You don't need to know your code at all, but the reports you get from the tax commission, they're going to show the code. These codes are related to the county name alphabetically. So codes that begin with 01 are going to be in Beaver County. Codes that start with 02 will be in Box Elder County, all the way down. Codes that start with 29 are going to be Weber County. Underneath each county are the respective cities and towns and other taxing entities in that county. So Beaver County, we then see Beaver City, Milford, Minersville. Then we have three that have an abbreviation of UIPA. That is the Utah Inland Port Authority. So moving to the right, we have columns first for our three common rates. There's the 4.85% state rate, the local option 1%, the county option 0.25%. Moving over, we see the 9 transportation rates. You can see where these individual rates do or do not apply in certain communities. If you scroll down through the various pages of this report, you'll see that they apply some places, they don't apply others. I realize that AT abbreviated tax, it's transportation infrastructure. It looks like it applies everywhere, but if you scroll down further, that 0.25%, it will go away for other jurisdictions, but it just so happens to be everywhere in Beaver and Box Elder counties. Then we have our miscellaneous rates, 6 of those. We talked about those already. And then on the far right, at the end of the rows, we see a column that adds all of those rates together and tells us our combined rate. So jump on when you have a chance, grab one of these reports, look and see what taxes are assessed in your city or town. You can see your combined rate. At the very end of the report, if you scroll all the way down, there's this really helpful section. It identifies any new tax that's been recently enacted, tells you other unique information that you might want to know. So this is a great tool. The reports are really well done. Kudos to the Tax Commission for making this so easily available. Okay, back to Bob's Toy Store. Now that we know about all the different sales taxes in Utah, our next question is, how does this 70 cents of sales tax get sorted and make its way into the corresponding government entities' bank accounts? Well, let's talk about sales tax flow. In general, here's how it works. You have a buyer who pays sales tax to the seller as part of the total purchase price. The seller takes that money, they set aside their profit, their cost of goods, and then the sales tax that remains, they send that to the Utah Tax Commission. Now, that transfer of taxes from seller to Utah Tax Commission happens monthly, quarterly, or annually. If you are a seller, or if a seller is really small and has an annual tax liability of $1,000 or less, they can file one time a year. They can be an annual filer. Small to medium, sellers, they can do monthly or quarterly. But the largest sellers, those that have a monthly tax obligation or tax liability of $50,000 or more, so they owe $50,000 of sales tax or more per month to the tax commission, and there's quite a few out there, they are required to file monthly. They cannot file quarterly or annually. They've got to file monthly. The reason for that is that the tax commission really loves to receive its tax revenue from sellers as early and often as possible. And there are 2 big reasons for this. The first is the time value of money. $1 today is worth more than $1 in the future. So the tax commission wants to get those tax dollars early. Secondly is because late payments, if a seller gets behind, falls into delinquency, penalties and fees start accruing, that creates a lot more administrative work for the tax commission. Because of this, the tax commission offers a 1.31% discount that we call the seller discount to monthly filers who maintain a record of on-time payments. It's only available to monthly filers, and they have to consistently make their payments on time. Now, why would the tax commission offer this incentive? Why should a seller get this 1.31% discount on the taxes they owe to the tax commission? Well, to make a long story short, it's because this discount, this seller discount, actually creates a positive return on investment for the tax commission. It's a win-win. The tax commission gets its tax dollars early and often, and the seller gets that small 1.31% discount. So it's worth doing. It pays off financially. That said, I'm ignoring the seller discount in all of the calculations we're looking at today. I'm not going to take it into consideration. And just know that in addition to the seller discount, there are other fees and reductions that are applied at the tax commission level before that money goes to your taxing entity. There are others, but I'm just not going to go into that today. It's not relevant for what we're trying to accomplish. But the seller discount exists. It's out there. And we're not going to worry about the nuance. And then, like I said, the tax commission sends that money to the individual taxing entities. Whatever amount they are owed, the tax commission does its math, and then that money is sent to the individual taxing entities. We'll look at this just a little bit more. It usually takes about 2 months. There's typically a 2-month delay for the tax commission to collect the revenue from the sellers, do their math, apply their formulas, and then send that money to you. So keep in mind that when you receive that monthly distribution, you get it every month. When that is deposited into your account, and that deposit happens electronically, so direct deposit from the tax commission to your bank account, those sales or the revenue you're receiving represents sales that occurred several months prior. One effect of this is that your February and March distributions tend to be bigger than other months because of the holiday shopping that occurs in November and December. So that shopping occurs, the sales taxes are making their way through the process. There's that 2-month delay, and then they hit in your distribution, and you'll see that February, March tend to be a little bit bigger than other months. When you get your monthly distribution from the tax commission, they send you very detailed reports, itemized. They tell you where every dollar came from, and those reports are really useful. I'm going to show you one in a minute, but before we do that, I want to address one more topic. So that topic is the local option 1% sales tax. We've talked about this a few times already. It was first allowed by the state legislature in 1959. At that time, the rate was initially set at 0.5%. And it was distributed based entirely on point of sale. So point of sale is the location or city or town where the transaction took place. So wherever those sales occurred, all of that sales tax money was distributed to that jurisdiction. Something really important about the local option 1% is that this is unrestricted money. Remember some of those other sales taxes, some of the other 18 that we talked about? Transportation, parks, arts, trails, rural hospital, right? They're earmarked. Local option is not earmarked. It goes straight into your general fund, so you can spend it for pretty much any corporate purpose as long as you've included that expenditure in your annual budget. For that reason, in my opinion, it is the most important sales tax to Utah cities and towns. Now, in 1983, something really big happened to the local option sales tax. It changed significantly. Instead of the distribution being based 100% on point of sale, a new distribution formula was adopted by the legislature, and we call that distribution formula the 50-50 distribution formula. Now, half of the distribution is based on point of sale, and the other half is based on your city or town's population. I want to point out that the 50-50 distribution formula only applies to the local option 1% sales tax. It doesn't apply to any other sales taxes in Utah. Because of the impacts of the change in this formula, and they were significant. Some cities stood to lose a lot of money, and other cities all of a sudden were going to start generating sales tax revenue that they had not been able to collect before. So in order to mitigate the impacts of this change to the distribution formula, it was phased in over a period of 8 years. It started in 1983, and then in 1990, it was completely phased in, and the rate was increased to 1%. And because you've probably been wondering this whole time, why do we call it the local option 1%, is because the rate changed to 1% in 1990. I want to mention that the 50-50 formula was not random or arbitrary. It was actually the result of many years of negotiations. Like I said, it created winners and losers, but there were winners and losers before the 50-50 formula. Before 50-50, cities with all the large retail and commercial, they were the winners. They got all the sales tax revenue, and the bedroom communities, the residential communities, they got nothing. So winners and losers, and if the formula was ever to be changed again, we would have new winners and losers. And because of that, even though it's not perfect, it's probably the best we've got. It's a good compromise. And so there's a general truce amongst all of Utah cities and towns that don't mess with the formula. It's probably good right how it is. Why should point of sale factor into the formula? Well, commercial development oftentimes requires higher levels of infrastructure, more utilities, wider roads. There are public safety impacts. And if a city has spent all of this time dedicating a certain portion of its land to commercial use, they shouldn't be penalized for that. Why population? Because residential development doesn't usually generate enough tax revenue to cover the costs of servicing it. And people need places to live. So we don't want to penalize communities that are investing in housing in places where people live. So both point of sale and population are factored into the formula. I've been on both sides of this equation. I could argue all day long why population should be factored more heavily or why point of sale should be factored more heavily. But 50-50 is a pretty good compromise. Okay, we're just about done. I've got just a couple of slides to show you, and then we're going to wrap up. This is a report that the Tax Commission will send with its monthly sales and use tax distribution. When you get those reports from the Tax Commission, there is confidential and protected information in those reports. Do not disclose confidential information, please. Only a couple of people in your organization are even allowed to see some of that information. And so just be very careful. Out of an abundance of caution, I have made this report anonymous. I've blanked out some identifying information. So you probably won't even be able to tell what community this is from, but this is a distribution report from last month. It'll tell you the entity name. It'll tell you that row A, there were $789,000 of direct point of sale sales tax generated that month. You scroll down, it tells you your population and how much of your population is as a percentage of the total state population. All the math, all the formulas is going on behind the scenes here. And you can see, your point of sale, you can see your population. That gives you on row J a total distribution. This community had $982,000 in the month of March from sales tax. I know for many cities and towns, that is a lot. Some of the larger cities and towns are well into the millions of dollars each month in sales tax revenues. Further down on the report, it will show you some deductions. There's an administrative fee. There's some deductions for homeless shelter funding, and so on. But you can see the total amount that the Tax Commission is paying in sales and use tax, and a balance forward if you're owed anything in a future distribution. So it's a great report. Again, please be very careful with the protected information. We are just about done here. I want to mention that in addition to the 18 different sales taxes in Utah, there are more. There are 16 what I would call sales-related taxes in Utah. They are charged on the purchase of certain goods and services, but they are not part of the combined rate. We really don't think of them as sales taxes. Technically, they are, but they're for separate purposes. They are all earmarked for specific uses. You can find those sales taxes in the same place. It's just going to be in these columns instead of the combined columns right next to them. So you can go online, you can see what other sales-related taxes apply in your jurisdiction, just like you could for the combined rates. Check that out when you have time. Quickly, those 16 sales-related taxes, we have a couple for transient room, like hotel taxes, motor vehicle tax when you rent something. There's a restaurant tax on prepared food, couple for 911 funding, municipal telecom, municipal energy sales and use. Again, a little bit outside the scope of what we're doing. They are technically sales taxes, not part of the combined rate. We have covered a ton of information. That is it for our hour. Our time's up. But yeah, we've covered a lot of ground. I hope you learned some things about sales tax that maybe you didn't know before. What questions or comments do you have before we go? I see some comments in the chat, and let's see. I don't see any questions. Is there anything we can answer before you jump off?
Well, they're thinking about that. I say, Adam, take a drink, catch your breath. Covered a ton of stuff. That was awesome. I learned a lot myself, so thank you. That was really great. Just as if anyone's thinking of any questions, a reminder that this will be posted online on our website and on our YouTube page, as well as the slides will be posted there as well. So you can find all that information. You can also find my info on there if you have a question for me or if you have a question for Adam. Don't hesitate to reach out. We will get you taken care of if you have any questions on this or any of the other subjects that we've already covered, or any other questions you might have as you're going through administering your city. I don't see any questions popping up, Adam, so I think you're off the hook for that today.
All right. Thanks for joining us.
Yeah, thanks everyone, and we'll see you next time. Thanks.